it's only appropriate that on today's Money Monday, we're talking about the fiscal cliff. David Seeger from Great Lakes Credit Union joins us.
Good morning.
David, I bet you're a busy man following all of this.
Indeed, yes, very much so. Europe this morning, they're mixed in terms of what's going on. It's affecting them as well, what's going on over here in the United States. So,
what, the fiscal cliff talks are affecting European markets?
Exactly,
okay.
as well as Asian markets. They were rough overnight as well.
Global economy.
You're right. But now, surprisingly enough, the markets locally, the futures are looking that they're up a little bit. You can see this, the graphs where they were going down. Now they're starting to bounce up a little bit with some hopes of some type of minor type of agreement that they may come up with. Won't be the full-blown
short-term agreement.
Short-term agreement, kicking the can down the road for the rest.
Right.
And that's how we do things.
Can you do that?
Well, they've done it every time so far, and that's it. We're going to run out of times pretty soon.
Yeah. So this is just an optimistic view of, I mean, they're just hoping that something.
Some type of partial agreement during the day today.
Okay.
Congress gets back together at 11 a.m. this morning.
Correct.
We'll see what happens.
We'll see what happens. Let's see if they come up with an agreement.
What do you
That's what we're looking
think
for.
will happen?
Well, this is what I'm thinking, specifically on the taxation issue. They're probably going to be around the $250,000 mark in terms of affecting your taxes. If you're above that, you're probably going to get some type of increase. Below that, you're probably not. But instead of going up to 39.6, where the rates will go tomorrow, they might compromise on a 37.5%, and that could be the compromise. Okay, we'll go with the 2% that's going to get the additional tax, but we're going to tax them at a lower rate.
Are they talking spending cuts too with this deal, or that's kicked down the road?
Kicked down the road. They can't get it done in time because they waited too long.
Spending's the issue.
Yeah, exactly. We have problems. We have to do both,
right.
you know, and then not addressing the spending issue, not enough time.
Okay.
Another thing that they need to address is on Saturday, last Saturday, unemployment benefits ran out. That appropriation ran out, so they're going to have to address that if they want to increase or maintain unemployment benefits for folks. Otherwise, that's going to be a huge problem as well.
Wow.
Do you think that they will?
Probably that, because that's a political hot potato, so I don't think they're going to mess around with that too much.
Well, okay, so real quick, let's say nothing happens today and we do go off the fiscal cliff officially. Let's talk just some hard numbers of the average American, what that will mean.
Okay, if your household income is between $20,000 and $30,000, for example, you're going to pay $1,064 more in taxes. If you're $40,000 to $50,000, which is kind of where a lot of folks are, we're looking at the medium household income, $1,729. And if you're up to 75 to 100,000, with the two people working, it's not uncommon to see that. 3,688.
Wow, that's a big hit.
Between 100 and 200, we're looking at 6,662. So we got some big numbers here we're talking about.
Come on, Congress, do something today.
Exactly, they need to.
Joining us, of course, is David Seeger from Great Lakes Credit Union.
Good morning.
And David, you put together some predictions for us.
For 2013 economic predictions. Well, we'll get right into it then.
Now, this is based on if a deal of some type is reached
Right,
today.
a sane deal, put it that way.
Okay.
It would actually address some of the issues.
All right, here's
economic trend, jobs. It looks like we should average 173,000 jobs per month, and which is a little bit better than this past year. Now, we'll still have unemployment probably in about a year from now, about 7%. So this is still too slow. We need to have more jobs than this created to make it a very robust recovery. But at any rate, 170,000 jobs per month is better than the 70 or 80,000 we were seeing.
Yeah, that's almost doubling what we're seeing now.
Exactly.
Why do you see this happening?
Slightly improvement in the economy, people a little more confident, not much more, but a little bit more. So
construction going up?
Yes, exactly, and that's where the sunlight is there. In terms of consumer debt, continuing a decline in terms of total consumer debt, and one of the reasons is because interest rates are lower, and that's helping. People are able to pay back, plus the bank won't give people some loans anymore, so consequently that drives the number down. And let me see here. Housing, this is the ray of sunshine. Looking at housing starts 900,000 in 2013. Now, for every house that is built, it creates 3 full-time jobs for a year.
Oh, wow.
Plus the multiplier effect of the indirect type of jobs that are related to it as well. So that's really going to help us.
Yeah, that's great.
And housing is 5% of our GDP. And right now it's about half that. So this may be the catalyst to give us a push if all goes well.
My God, that's great.
Manufacturing continued to be fairly robust. It held up pretty good in 2012. We anticipate it to go relatively well in 2013. Interest rates to remain historically low, at least through 2015. The Federal Reserve, by policy, are going to try to keep rates as low as possible. This is an indication of how fragile the economy is. For the financial sector, this is not good news. We'd like to see slightly higher rates so we can have a spread. If you see your bank raise fees on different type of services, this is the reason they can't make as much money on the spread, so they try to make up the difference on fees.
Oh, interesting.
Bank of America tried that last year. And
Yeah.
it
Right,
didn't
didn't
go
work
over so
out
good.
too well.
No.
What's going to happen with inflation? Do you address that here? Because, I mean, we're printing $40 billion every month.
Yes, exactly. Inflation is still going to be relatively low. Now, even though they're printing the money, as it turns out, so is Japan and some of the other countries. So basically, it turns out to be a wash because you got two bigger piles in both countries. So consequently, there's not a lot of difference. That's doing for inflation. And what we have over here, budget tax increases. Okay, sooner or later, you're gonna see some tax increases on certain individuals and also some budget cuts. And that should have a drag on the economy of 1 to 1.5%. Now, the good news is this, it may be offset by the housing. Housing is starting to increase, so it may just be a wash in
Keep
from
our
there.
fingers crossed.
Exactly.
Yeah, absolutely.
And then the new normal, slower growth due to drag by increasing debt and slower global output. GDP, looking at which is the total amount of goods and services we produce, 1.8 to 1.9, a little bit lower than this current year because some of the drags we're seeing. Heightened uncertainty, largely due to government inability to establish fiscal policy. Businesses in a holding pattern. In 2008, we didn't have a lot of liquidity or cash in the market. Now we do, about $1 trillion to $1.25 trillion. And but businesses are afraid to get in.
They don't know what to expect.
They don't know what to
They
expect.
don't know what regulations, what taxes are headed their way,
Exactly.
what healthcare costs will be.
And that's what I hear from a lot of small businesses when they talk to me about this. Just tell us what we're going to have to pay.
Absolutely.
Please
So
tell
we can
us.
forecast.
Exactly. And they can't. And that's
All
what the
right.
problem is.
David, a lot of great information. We do have to go to a break, but of course, if people want to get in touch with you, how can they reach you?
At our website at glcu.com.
All right, thanks so much. A lot of great information. We certainly appreciate it. And we'll have a lot to talk about, of course, next week as well.